Hello YouTube, I'm gonna make a quick video. I'm currently live streaming on June 9th, 2026. And same principle again, you're not risking more than 3% for the day. I'm being generous here, and like you really don't wanna lose more than 2% throughout the day. And since we're in a very volatile market at the current moment, we're going to risk one contract. We're gonna use one contract and risk less than 1% on the trade. So far from 9:30 New York Open until currently, we went down more than 1,000 handles. So it is very volatile, and we're approaching the afternoon session in 8 minutes. It's currently 1:22, and the reason why I have my big chart on the left is because I have something going on also on the left. So I'm gonna do something like this. Something like this. And so far, what we have at the current moment, we have short-term high here that I'm looking at. Buy side liquidity, and then I'm just gonna copy, put another one right here. And we do have the new day opening gap at the top here. But if we look at the higher time frame on the bottom right, we just swept the relative equal lows here, relative equal lows, and we can see price just gyrating while rejecting from this relative equal lows. So what I'm waiting for is the 1:30 for the afternoon, and after that I'm gonna look for a first positive fair value gap, see how it goes. It has to be more than 10 handles for it to be first positive fair value gap. Not only that, it has to have some kind of context of on why it's the first positive fair value gap. So that fair value gap could have taken liquidity, and we could use that information to mark it as the first positive fair value gap, or it could be on top of the new week opening gap. So today we're June 9th. This is the new day opening gap of the day. Price was hanging around there and then rallied lower. Retracement failed to go to this fair value gap, rallied lower. 3 consecutive up close candle. That would make it an order block. Or what you can do is use this whole thing, since there's no down close candle in this price action, and use the quadrant and see price closing under the bottom, well, the lower half of this 5 up close candle. So I'm gonna leave this right here. Launch macro. See the 12:30, what it did here. 12:30 right here. Went up into this fair value gap here. This should be in red. And this should be in orange. $12.30, went lower. Used it as support at 113, and then touch once more at 13.16. Need 4 minutes. 4 minutes until the 1:30 Then we'll see what price does afterwards. So we have relative equal highs here. There's a lot of stuff going on here. This is the 4 hour. I'm gonna look at the daily. The daily, we still have this fair value gap here. See if price touched it, and it did to the tick. You see? Right now, we'll look at ES. Okay, get the 4 hour, 1 hour. The 1 hour is looking pretty great. Touch the lower part of this 11 o'clock SIBI. And I think I'm gonna 30-second. And then this 5-minute, I'm gonna drop down to the NASDAQ. So NQ. I'm gonna leave this one, this clean E-mini NASDAQ chart, because there's way too many lines on the other one. Let's look here. So 30-minute, it touched the lower portion of this SIBI, which is great. I'm gonna leave the 30-minute. It's actually on my second Mars, so I'm gonna go back into the 5-minute. In the 5 minutes, the same thing. There's this 11:55 SIBI. Should be in orange. And we're still waiting for the first relative fair value gap for the afternoon. So 1.5 minutes. You have this huge SIBI here. Use it as support to then go higher, clearing out the short-term high. There we go. Everything looks clean. I'll leave this one right here. Daily fair value. It's the May 5th. No sync. Bottom right, 30-second. And we're approaching the 130. So once again, a quick reminder, you're not risking more than 2% throughout the day. And we're gonna use one micro contract because of the volatility. That's something that I've struggled for years, is I always used the same lot or micro on each trades. So I had this analogy from Neo Young, I think that's his name. He said to risk a little bit more on your A plus setup, and you can like compare it to poker. Like if you have 2 aces, you're for sure gonna risk a little bit more of your money since you have good cards. And going back to trading, if your setup is an A plus setup, you're gonna risk a little bit more. You're not gonna have the same risk on each trade. So this is something that I've struggled for years and months. I had I had a strategy where I didn't have my stop loss at the correct placement, such as the fair value gap. So there's I'm gonna use this one as an example. Usually when there's a fair value gap, we want to use the first candle that makes it as a stop loss. So basically, if we zoom in, we use the top of it and then the bottom of it. And this is the first candle that makes a fair value gap. This is the second candle, fair value gap. And this is the third one right here. What I would do is I would have my limit order at the top of it, or I would just click and always have my stop at 20 points. If you look at that, it's very, the risk parameter is very tight, so the correct one would be at the bottom of it, the first one, and then take partials at reasonable spots. So we have a first partial here at relative equal highs, a second partial at the new week opening gap, and then final exit at the buy side liquidity of 11.55. So from that point, it would have been a 3-to-1 risk to reward, taking partials here and here at reasonable price. You can even use this one, this SIBI, to take a partial. I'm gonna leave this one here because I like this one. We're at 1:33 o'clock. There's still no first relative fair value gap. You might have to wait for the 150 to 210 macro. By the way, this is just an example. I'll leave it here. But for context, why I'm looking for higher prices is because on the daily, I have the daily right here. On the daily, we just reached into the May 5th fair value gap here, and then price is just going up from that point. Should be the 5-minute. And let's look. We have we're about to see at the 135 if this is a first positive fair value gap. To then go higher. Again, first positive fair value gap. The candle is about to close in 20 seconds and we'll see if it leaves a gap. So far, this gap is more than 10 handles. And it's the first one before taking the relative equal high. So this would be a valid fair value gap. Stop would be here. I'll go on my second screen really quick. We have a immediate rebalance here from these. And then boom. The bodies are closing above the middle point of this first positive fair value gap, the one that took The one before it took relative equal highs. And if we look on the 5-minute, look on the 5-minute, this is the target right here. Partial has been taken off the new week opening gap, and we'll see if price is respecting the new week opening gap. Touch the bottom part of it on the 30-second. It went into this SIBI right here. Sorry, BISI. Perfect. You don't want to see price go back and close under this. We have two idea that it would support price to go higher. So we have the new week opening gap. We closed at the middle point of it, and we have this SIBI right here. Our last threshold would be this down close candle right here after this fair value gap. So price shouldn't go under this, otherwise it would be a problem. Not a problem, but it would just mean that this run is done and we're gonna have to wait for the next run. Zoom in on 30-second. We have this as an order block. Plus OB. It's also there on the 1 minute. I'm gonna do no sync because it keeps the chart clean on the left side. Right here. We have these three up close candle. Another partial here. Partial at the lower point of the new week opening gap, and another partial at the short-term high here. we touched this 1 minute SIBI that I've outlined. Let's see if it's going to respect it. Close above the middle point of it. At this point, most of my position is off because we've managed to get way more than 40 points. As you can see, price closing above it. And now I'm just tape reading. See if it's going to reach this short-term high that I've outlined, which is this one right here. If we look on the 30-minute here, I've outlined this 30-minute SIBI. And then above this buy side on the 5-minute, it's also the 30-minute SIBI of 11 o'clock right here. So I'm gonna remove this and then I'm gonna go back into the micro. This would be the micro. It's a little bit of a mess, but can all see this 30-minute SIBI. As you can see, 30-minute SIBI. So far, since we're aiming with the buy side and also the 30-minute SIBI, so far what's going on the 30-second is it went above this 1-minute SIBI, touched the lower portion of it, and now it's just hanging around here. At this point, I don't like what I'm seeing, so I would close the trade completely. What I'm seeing here is what's my position with taking off here. What I'm seeing is this Beverly gap in the form of a BISI here, and they used it as resistance, the middle point here, to then go lower. So far, I am done for the day, and it was a pretty nice run. Now you might be thinking, yeah, you could have got like all of this price run right here, 500, 600 points. But my model is to make 40 handles or 40 points consistently. This though, this 600 whatever move, that stuff doesn't happen like every single day. So if we look back on yesterday, I made a video about that, by the way. I explained it, everything. This move from here to the upper quadrant of the opening range gap until the 30-minute SIBI that I've outlined. It's not even 600 still. So that stuff doesn't happen every day. What happens every day though is you can get 40 points and then let time do its thing with compound interest. So I did the right thing to remove most of my position here once I saw another PD array form and not respecting this down close candle at all. So far, we just disrespected this short-term low here and the order block. We closed under the order block. So right now, I would be looking for lower prices. I would be looking for lower prices, and points of interest would be this, and this, and this. See how price reacts off of those key levels. So we have the 116 BISI, 1215 SIBI, and the 1238 SIBI. Used it on the left here, it used it, and then right lower, and here, use the middle point, then go short, and then later on used it as support. Same thing here, use it as resistance, then later on use it as support. And you're not trying to aim for all of this, like you can take partials off of these because you can be wrong. Even me, I want price to seek this buy side liquidity, but I made myself clear that I would take a partial at the week opening gap and this 1 minute SIBI. So far so good. This order block here, we can use it as resistance to then go lower. But what I'm looking at right now is this 1 minute SIBI. We're also at the macro time. So this is my point of interest, this SIBI. I'll put a limit order here and have my stop right here at this first candle that makes this fair value gap. That out the way, like this. Price is looking clean. Then I'm risking 1%. But since this seems like the 2022 model, I'll risk 2. So you can see price touched it. Our position, I'm gonna add one more. And I'm gonna make sure to risk. This is 1.5% so far. Most of my position would be off here. It touched the new week opening gap. And we still have these $3 close candles. So I'm gonna put my stop right here since there's these $3 close candle. Sorry, these 3 up close candle. So far I'm risking 2%, 2.5%. Even though we used this 1 minute SIBI, what happened here was price on the 30-second went up into this tiny fair value gap here. If we zoom in, you can see the high here. The high of it on the top left here is 852 and a quarter, and on the right here 852 and a quarter. Same premise here. Bullish fair value gap. And then copy and paste. There's another bullish fair value gap here. We extend it. It used it as resistance. Same thing as here. So far, so good. Remove this. Look at the 1 minute. It touched the 1 minute fair value gap again. I'm gonna add one more. And make sure that I lose not more than 3%. So right here. If anything, I can just close half of my position here. But I like what I'm seeing here. Price just closing on the lower portion of this tiny SIBI. But I went and revisited the new week opening gap. I like how the bodies are closing under this short-term high on the 30 second, sorry. That means price would be willing to seek lower prices again. If it closed above this short-term high I'm gonna close most of my position. Whoops. 2. I'm gonna put the 1 minute on the bottom right and then 30-second on the left side because I'm more focused on it. But here, I'm gonna put 2. Buy limit to take out most of my position. See if it's gonna close above it. If it does, we're out. So I got 10 more seconds. Took out the short-term high again. See if the bodies are closing under. It's still closing under. I'll be right back. Same premise here. We have 3 factors supporting the idea that price would go lower. So we have the 1 minute fair value gap here. Price shouldn't go above this candle here. It should not go above here. And if it does, it shouldn't go above this high. So I'm gonna move my stop. So I know if it goes above this, I'm clearly wrong. But so far, it's supporting the 30-second 2 up close candle on the upper portion of this price run. Still hanging around the week opening gap. If we remove everything, such as this, no, I guess it's fine. I can leave it all. I'm gonna measure this quadrant here and put it in octants actually. From the high here until the bottom here. It used the middle point of the lower half. So it's 28,866. And the high of this, if you look at the top left here, is 28,866. This would be considered a I'd say like a hard market. Like it's not comfortable sitting through this at all. But right here, it was very easy. Managed to get 95 points. 95 points in the span of less than 10 minutes. But from here, 151 until now. Right now, it's been 12 minutes. I've been in this position for 12 minutes. Let's see it use it. This tiny sibby once more before going lower. So I have two of my position that are going to be taken off here, and the final position here off of this 1 minute civvy and the other one here. I like this fair value gap. See if it respects it. The middle point, okay. There's a tiny volume imbalance. See if it supports the middle point. And it does. It failed to reach the middle point of it. And we're at the 2 p.m. silver bullet hour. So this right here would be considered a propulsion block. On the 32nd, we have this red order block, and then price. We have all these 1, 2, 3, 4, 5 consecutive up close candle into it, leaving this the propulsion block. Deeper red. So price really shouldn't go above this, so I'm gonna move my stop just above the lower quadrant of this order block. I'm still risking 2%. Touching the lower part of the new week opening gap, price order closing at the bottom part of it. I'm gonna do one here, confirm, and then another one here. Partial here at this fair value gap. another one off of this, and final position off of this big fair value gap here. I'm gonna make the 1 minute a little bit cleaner. Touch the middle point of the propulsion block. And we do not want to see it close above it. I'm gonna get stopped out for 2% of my balance, but that's fine. That was the rules for today. Got stopped out. But this though was a good price run. This is was kind of tough to sit through that, but we'll see. Quick little recap. We waited for 130. 130 right here. And then price showed us a fair value gap in the form of a BISI. It's the one fair value gap before taking relative equal highs here. And we use that as an entry right here, the 30-second, and then added one more off of this gray shaded area, and then had a partial at the new week opening gap, and then final exit on this 1 minute fair value gap. Recap again. Entry, partial, re-entry, final exit. And then we took a loss out on this. So I hope you guys enjoyed this video, and I'll catch y'all on to the next live stream.